Hi, everyone, and welcome back to another Seraphim Space live webinar. Today, we're here to discuss the findings of our latest index report. And I'm pleased to welcome back Seraphim investor Lucas Bishop, who was leading on the project. Hi, Lucas.
Yeah.
I'll be asking Lucas to pull out and break down some of the key points for the audience. But he's also happy to take questions from the audience. And if you do have any, please post them in the chat, and we can pick them up at the end as we go through the Q&A. If anyone wants to follow up on the report, you'll find it on our website. We've also been sharing it across our social media if you want to have a deeper dive yourself. So I'll go straight into the questions for Lucas. Great news, Lucas. This quarter, the index indicated 5 consecutive quarters of growth in the space tech sector. What do you believe is driving this sustained momentum, particularly in the face of global economic uncertainties and other general VC trends?
Yeah. So it's a good question. I think the first thing to clarify is that 5 quarters of growth is on a trailing 12-month basis, so taking more of an average over a longer period of time. This quarter was actually just a hair down from the previous one, but given that that is still significantly up from the period about a year ago, we see that continued positive trend on a trailing 12-month basis. Why are we still seemingly within space seeing a positive upward trend in investment? I think if we look back a year ago, kind of late 2022 and through some of 2023, we were still in a bit more of an economically uncertain environment. People didn't know exactly where interest rates were heading. And accordingly, VC as a whole experienced a pullback. But following that, something which space also experienced in terms of investment, space does seem to have been bouncing back, particularly. There's probably a number of factors at play for that, but if I had to boil it down to one, particularly one in 2024 to date, I would probably say that it's this kind of US-China space capability race that's probably had the largest impact on investment, and I would say particularly on the Chinese side in building up kind of their commercial space capabilities. So that, yeah, I'm sure we'll come back to China later, so I'll leave it there for now.
Yeah, that's super interesting. I think it was the last report where China had overtaken the US, and then this time the US are back in the top spot. But yeah, we'll touch on that again later. You just touched on the point that it was the trailing 12-month investment growth. And the figures you pulled out was that it had grown from 8.8 billion in Q3 up to 8.5 billion in Q2 2024. Could you break down any factors contributing to this?
Yeah, it was the other. It was 8.5 in Q2,
Yes.
and then 8.8 as of the most recent quarter. So I guess, what is that?
Correct.
300 million up from the last period. Yeah, I mean, we're still interested. We're still down from the very high highs of the kind of peak of space tech investment in kind of 2021, where we were around 12 million. But it's recovered to about 2/3 of that. Factors at play, again, kind of this US-China space capability race. Also, just a general recovery in investment, I think, in growth and generally capitally intensive businesses after a bit of a hiatus through late 2022. I think businesses that were relatively well funded, kind of put off investing, and likewise investors were a little bit more nervous about deploying relatively large checks until companies either were forced to raise large rounds through lack of runway, or when things became a little bit more clear and investors regained some confidence. I think one thing that buoys space, I guess more so than general VC, because there is a fairly notable difference in the recovery which general versus space has seen, is the fact that space is generally quite capitally intensive, particularly in satellite manufacturing, rocket launches, and and satellite constellations. If you have a SaaS business and the investment environment is not great, you have levers to pull where you can, I guess, extend runway, cut headcount a little bit, and you don't need to raise particularly large rounds. However, a rocket launch business isn't going to get to orbit without raising several $100 million dollars in funding. So they are just by necessity forced to raise fairly hefty rounds. So that might also be a factor at play.
Yeah, so you think the VCs are just seeing that these businesses need that and
Yeah,
noticing.
there's just kind of no way around it until I guess you get to a point or a maturity where you can start to tap into other sources of financing. Whether you IPO or start to access debt financing. But for what we're looking at generally, there's little way of avoiding that for the constellations, the rocket launchers, the satellite manufacturers.
Yeah, that makes perfect sense. Thanks, Lucas. You also highlighted that there was a record 595 space tech deals completed in TTM to Q3, significantly higher than the 386 deals from the same period last year. What does this surge in deal activity tell us about current investor appetite?
Yep. So generally, I think we're seeing strong growth really across all rounds of in space technology businesses. There's good growth in everything from seed, Series A, Series B, up to Series D plus. In absolute numbers, the growth is kind of driven by early stage deals, particularly, especially seed deals. And why is that? Again, kind of a combination of factors. Now that the path has been laid for by not just SpaceX but a number of other kind of high performing space technology companies, both founders and investors see and believe that you can found and build a venture business in space. Something that people would have probably generally not believed if you went any time before kind of 2012. Also, now we've got we've got a lot of people working for the likes of SpaceX and other highly entrepreneurial space businesses. So coming out of those and founding your own kind of next generation space businesses is becoming increasingly common. And likewise, the VCs are seemingly excited to back space because of the emerging potentially very large opportunities in which it addresses. So I think a few factors on both sides, both on the increased number of entrepreneurs emerging and also VCs increasingly likely to back founders working in and around space.
Yeah, we touched on this on our webinar last week with the accelerator team. Just how many new businesses that they are seeing. So if anyone's interested in hearing more about that, they can watch that webinar on our social channels. Back to Lucas. So you mentioned earlier that Q3 saw heavy investment in rocket launchers, satellite operators, manufacturer segments, making up to 9 of the top 10 deals this time. Why do you think these capital-intensive sectors are attracting such large amounts of funding compared to compared to previous years? Because you've touched on why they need it, but what's changed?
Well, I think in previous years the kind of the weighting amongst segments has changed. If you look back, particularly through kind of 2020, 2021, the largest rounds and the bulk of the capital being invested into space businesses was kind of in satellite constellations. And I think that was in part due to Starlink and in part due to OneWeb. There's been a little bit of a rebalancing in that, a lot of, I think, constellations or in Earth observation, some of them listed, some of them got a little bit more mature, some of them at this point seem to have reached more break-even financial profile. So, some of them don't need to access funding anymore. And what we've seen, at least in terms of investment, is quite a significant growth in satellite manufacturers, and we've seen a few fairly high-profile deals recently. I guess Apex in the US being one of them, Muon one in this quarter. And likewise in rocket launchers. I guess I think the reason why 9 out of the top 10 businesses in this quarter have been in these relatively capitally intensive sectors is once again because it's kind of a function that you just have to raise a lot of money to build your rocket, design it, test it, and get into any kind of frequent commercial service. Something that SaaS startups generally wouldn't need to do, albeit as we did see, in the largest round of this quarter, that is a geospatial business, which I guess raised a lot of money from a position of strength due to the strength of the founding team. So not to say it can't happen, but I think relatively capital light businesses have much greater optionality over whether they do choose to raise, if they can raise large rounds when it suits them to kind of blitz scale.
And are you expecting that trend to continue for next Q?
Yeah, I think I think inevitably that will happen, and I think part of what's driven some of these larger deals, particularly the Chinese ones, which were in satellite manufacturers and rocket launchers, is that they are in their kind of early scale-up phases, building out their capability. But China doesn't have a reusable rocket system just yet, and they're also actively deploying commercial LEO constellations, and those things won't reach maturity without a pretty significant additional level of investment. So I think it's a fairly safe bet that there's going to be some continued fairly large rounds in hardware space businesses going forward.
Most definitely, yes. Interesting. And continuing on that theme, as we touched on earlier, China remained a strong player in Q3, but was pipped off the top spot again by the US. But they were responsible for 3 of the top deals, alternating with the US as leader. How do you see the China-US dynamic evolving over the next year? And into
So the first half of, oh, sorry, I cut you off.
No, fine. Go ahead.
No, through the first half of 2024, super interesting that for the first time, China's total investment was actually higher, just by a little bit, but higher than the US. In very large part, that was driven by $1 billion new SATCOMs constellation deal in China. But nonetheless, it sends quite a clear message that they're really heavily driving forward to create these capabilities which look and feel an awful lot like ones that the US has already developed. So trying to catch up in the field of building satellites, SATCOMs constellations, and rocket launchers. So I think that's what's propelling investment, and I'm sure it will continue to do so in China for the near and foreseeable future. In the US, I think accordingly, there's a pretty strong focus on the industrial base. I mean, we've seen a few kind of dedicated industrial base conferences popping up all over the place, industrial base and defense. I guess the standout transaction for this quarter, quite obviously, would be Anduril raising $1.5 billion. We didn't actually include that in this report, really, because it doesn't seem like that funding is being directed towards the space, their space segment. I mean, while they are getting increasingly involved in space, clearly, it seems that the majority of that funding is dedicated to really spooling up their production capacity more than anything. So not including that in our report. But others, like Hadrian, for example, have raised fairly large rounds recently. I think they raised a $100 million plus round, which is again building out kind of the US industrial bases. The US needs to become increasingly reliant on its on local domestic suppliers. So yeah, I think just going back to your question, yeah, I think that about covers that. I just kind of expect to see more in both domains.
Do you think though that it's ever possible that China could overtake in the long term, or are people like SpaceX just too far ahead?
I think I'm right in saying that actually China has a really strong GPS capability. I think there's certain things that they're really technologically advanced in. But I do think generally in commercial space, I mean, SpaceX is just such a has a very strong lead, but wouldn't be wise to underestimate what China can develop over the course of 5, 10 years. I'm sure they can do. Yeah, I think they've got very capable engineers, so they should be able to definitely make some very strong headway at least.
Definitely, and there's just a huge buzz in the APAC region, I think, isn't there, for this kind of technology and activity. So yeah, watch this space for sure. If anyone's got any questions for Lucas, please post them in the chat. Don't be shy, and he can answer them at the end. Lucas, you also reported that Lockheed Martin's acquisition of Terran Orbital for 450 million was one of your key highlights. How does this acquisition reflect larger trends in the defense and space sector?
Yeah, so I guess it kind of highlights. So Lockheed originally, I think, put in a bid for 600 million, then went back on it and has now finally agreed to purchase the company at 450 million. It kind of highlights that some of these public space, some of the businesses, space businesses that have gone public, have had their financial struggles. I think in the case of Terran Orbital, they were basically short on cash and found a very logical home in Lockheed. Lockheed accounting for the vast majority of their order book, and also not having an existing small sat manufacturing capability like some of the other major defense primes had already acquired like Millennium with Boeing, and Blue Canyon with Raytheon. So I think that's a fairly logical one for Tehran, having some kind of immediate cash flow issues. But we also have seen, I think it was the completion of the Astra take private deal in this quarter, another business that was having cash issues, albeit for different reasons. I think Astra, a more fundamental issue with the rocket ultimately not being too reliable. But yeah, and we, I think in market some of the other players are pretty focused now on driving to a place where they're very financially viable. I think Planet's particularly focused on reaching cash flow break even. So yeah, it continues to be an interesting developments in the public markets, but I think it's clear that it's not all plain sailing for these businesses.
Yes, most definitely. And that's something you predicting you'll continue to see with these cash intensive businesses?
Yeah, I'd imagine so. Yeah, there's a handful of these space businesses that have gone public. Some are in fairly financially secure positions, others less so. So I'm sure they'll continue to be shakeouts for some and other acquisitions if it becomes necessary. But likewise, I think some of the other some of them are in a fairly good place. I appreciate that's not a very non-specific answer, but yeah, I think it's going to be a mixed bag.
No, that's fine. Everyone wants to know your opinion as the expert on that, so that's great. Thank you. You mentioned in your index around by Anundril, if I'm pronouncing that correctly. Say it again.
Anduril.
Anduril, apologies. It was a 1.5 billion raise. Although excluded, it showcases the increasing intersection of defense and space technologies. What does this say about the future of dual technologies in space tech, and just how huge and important is this part of the market right now?
Yep. So as I said, so we excluded Anduril from our investment stats, but still a very impressive raise, mostly focused on the business scaling their terrestrial and I guess marine product line manufacturing capacity. Yeah, I think the signal though, in terms of the business's involvement with space is pretty interesting. I mean, just in the last couple of months or so, we've seen a number of headlines from Anduril in that they're, looking at space surveillance networks, looking at building their own satellites, partnering with Impulse Space for high mobility space missions, and also an announcement of buying satellite buses from Apex. So I just think it's kind of a recognition of the strategic importance of the space environment. It provides us with GPS, communications, and intelligence. I mean, all absolutely fundamental things for the future of defense. And understanding what's happening in that space environment and having a presence there is absolutely critical to make sure that we have continued access to it. So yeah, I think kind of positive signal there. And accordingly, it's kind of one of the key themes that we're looking at going forward from our funds, the crossover with defence, given that space plays such a critical role in it.
Yeah, exactly. And I think so many of our portfolio companies who weren't initially defence companies, now they're some of their largest clients. And so that makes perfect sense. Actually, if you wouldn't mind telling everyone a little bit why you excluded them, just in case people didn't realise.
Yeah, it's because I think, well, space is going to inevitably a relatively small line item, I guess, on the businesses in terms of the business's revenue build. And likewise, that the majority of that 1.5 billion, if not all of it, seems to be directed towards building out production capacity for their existing product lines. It doesn't. I mean, who knows? Hard to say, but just from our understanding, and logically, it doesn't seem like an awful lot of that investment would make its way towards the development of their space capability.
Great, thanks for explaining that. Most of the year-to-date investment in 2024 has been directed towards early-stage companies, as you touched on earlier, and I touched on earlier in regards to our accelerator. But what do you think that means for the future of the industry and the future of these kind of early-stage founders and pioneers?
Yeah, so if you look at kind of investment concentration over the year to date, you see that we're very heavily concentrated in businesses and kind of that early-ish growth rounds, kind of Series A, Series B, which is in fairly stark contrast. Yeah, that's the one in the bottom right, which is in fairly stark contrast to what you can see in kind of 2019, 2020, and 2021, where the majority of investment, over 60%, was concentrated in Series D plus, so later stage businesses. So through that period, I guess the majority of that funding was again accounted for by the likes of SpaceX, OneWeb, probably Relativity, and a couple of others that would form part of that. Today, what we're seeing is a pretty stark reversal, in that VCs are now very heavily backing businesses at a much earlier stage with the majority of the volume of investment. Why is that? Again, well, I think some of those businesses that were raising an awful lot, OneWeb wasn't raised around in a long while, and other fairly mature businesses that were responsible for some of those large rounds. Some of them have already gone public. Some of them are maybe focusing on accessing debt financing so that they don't dilute their existing shareholdings anymore if they've built, fairly reliable enough revenue streams going forward. So that might be part of it. I think the other segment might be the fact that a lot of founders have come out of these initial this kind of first wave of space startups, the SpaceX's, Relativities, Rocket Labs, etc., and are now founding new and exciting businesses that investors are very keen to back. So have a couple notes, just scrolling through them to see if there's anything interesting. No,
Yeah, sorry, Karen.
No, I think that's really. I just think it represents, excitement and the vision that there's a lot more left to a lot more, new and addressable markets to be created in and around space. and that investors are keen to back those and back new startups and founders that are addressing those opportunities.
Yeah, that's what I was going to say. I think there's just so many verticals to address, so many new founders, so many new companies, so many people realizing what space tech can actually address. So it's a fascinating time for them to all be involved. And, you know, I think it's awesome from an entrepreneur and an investor perspective. Well, that's all the questions from me. I don't know if we have any questions from the audience. If not, we will leave it there. I had a few people saying, why are we running this webinar during the IAC when I know a lot of the industry are visiting this conference? But we wanted to do it straight away post-release of our index. And this will be recorded, as everyone knows, and you can rewatch it on our social media. So if you are at IAC, please watch it at a later date. But thank you so much to Lucas for putting all that work in and answering all of my questions. And he's also happy to pick anything up post live on our LinkedIn channel.
Sounds good. Cool. Thanks, Leah.
Thank you.